Welcome to StockMarketPunding.com. What we'd like to bring to your attention is that we decided to put up what we call a spider ETF unit, S&P 500. Instead of putting my money in here, I'd rather go find a bull fund that would pay a lot more on the S&P than the actual ETF here. There are several out there. I'm not going to go into that today. They're on the StockMarketPunding.com website. Go fetch them up and go find them. What I will tell people on a SPY is that the upper end of this is a monthly chart, and that 10-month moving average, when it broke that, you put in a bottom, but now it is slightly above it. However, this monthly bar is, if I stay below this part of the bar, so let's make this clear. It's called the SMF monthly bar. If my trend comes back up here and hits that and does not close above half of that monthly bar, that's where the move will fail. Is you have to get back above half of the big monthly down bar as support level to say that you're going into a brand new bull trend, or another new bull trend from the original bull trend was over here. And there's been some hiccups that brought it back down to this V-shaped breakout right here on the SPY that's given it that support. One of the bullish things about the SPY at the current moment is that this 10-month moving average, which is very significant, is not descending in value, but rather going to give that $100 area a good support area. And if this keeps rising in value, and or you can have a closing price above half of this, remember, this bar, this monthly move right here is not complete until the end of the month. Then it will become a final closing monthly bar. Now, if I can maintain a closing price in the shorter term at 107, let's say 106 and a half, and I could consolidate there, I could take out that 10-month moving average at its current level, and I could actually get a closing price above 110.41 is going to make it bullish. The other thing that's bullish is that I'm not descending in the monthly MACD value, which is that blue bar. Now, that's that monthly take. On a weekly take, right here, you can see that this is a weekly SPY chart. Now, we got the same support there with the declining. So you want to look at the weekly is also firming up there, which is giving us, and the earnings season came in. We're going in our third week of earnings. So this is the second week of earnings. This is the first week. Earnings are kicking on all cylinders, as we said that they would. Now, you've got a weekly crossover, which is not bullish, but let me tell you what has to happen on a SPY is that the weekly has to flatten out at 108 and then act as the body of the support of the weekly bar, consolidate, and make higher highs on the daily closing daily bars. The short-term negative is that, just like the S&P, is that you do have a beginning 4-week sell signal. However, the weekly sell signal, the bullish thing for the bulls is, for right now, is that it's at 108.53, and now you got 108.18. If this here is, which is bullish, is at 108, now it's 0.53, now it's 0.18. That's where the bullish part comes into play, is that it stopped going down in value, which is going to act as a better support level for the SPY. If the weekly does next week or at any time go more in value here at 0.84, it's at 0.7. If this goes higher in value, that means that the weekly sell signal is worse and that this bottom over here is going to get tested. you're going to have short-term momentum at support based on that weekly MACD is not going higher in its last count of 0.8, but it's going lower instead of higher. That's why that's higher, and that's that reading there. So that's one of the things. Percent DS is at 31, which is bullish, meaning that from when the SPYs, like any trend or any index or any ETF, when I was at the high, I was 93% overbought, and now I made that low in this cycle at 21. I've come up to 31.88 in that weekly close last week. So basically what I want people to clearly understand is where any trend starts to develop with not a weak support, but more of a stronger support. So you can't just go from a level from weak to strong, but right now I would say that our model says it's a, it's not weak, but it's, in the middle of strong and weak. So I've got the upper end of that resistance no matter what. In order for me to confirm that monthly bar until that time comes, in the shorter term, I'm going to go to the weekly SPY right here. That's my resistance. If I can close above that bar on 620 at 110.35 and consolidate above here, that means I'm consolidating above the 10-week, and the 10-week stops going down in value and starts flattening out and starting to come back up. That's how new bull trends come back into play, versus the 4-week qualifier at SMF is the 10-week goes down in value like that. You close 4 weeks below the declining 10-week. That's an SMF bear trend on any index. Doesn't matter. Just like bull trends are created when the 10-week flattens out like it did here. All that time in 2008, it got flat, started ascending, crossed above the 20. It was a beautiful bull trend. And the bull trend topped out here and went into a shorter term bear. However, between the equal weighting of bear and bull momentum is that you're starting to see if that 10-week can flatten out, and the lower end of support remains right here in half of this weekly bar, and that's going to be 105.81 at support. You won't close below it. If you do, that means that weekly MACD is going to go down further, and more weakness is going to get built in at this last support level right here. I guarantee you. So short-term support, weekly SMF bar on the SPY, closing price above that area of 105.81, and a bullish good setup and change in trend is 4 weeks above the 10-week moving average. It flattens out. It's no more declining like that. And not only that, I would consolidate above it. I would bounce off of the 50-week. I would close above the 20-week. And I would come back to this area right here in the shorter term at exactly 115.67 as my upward resistance. And that this green line, just like it crossed over and went down here, is now it flattened out right there. It's got the ascending effect. When this mathematically goes higher, that SPY will be in a very bullish, bounces off support will be bullish, less bottom volatility, and you would be setting up a momentum to come back up and test the 200-week moving average at one. Well, the 200-week moving average is higher than that. It's about 121, but you'd come up and test half of that weekly down bar at 120.46. Okay, there's your bottom support. That's half at 105.81 of the SMF weekly bar. Here's the other SMF weekly bar, closing price above 1041, and sitting on top of the 50-week moving average is bullish. This is going back to a weekly buy signal versus weekly signal would be your bullish. Your bearish is a failure to close above half of the bar, a distribution bar. Monday's not here, and we slide back below half of that bar, and